Good morning. All right, here we are, Monday, March 23rd. Last Friday, we passed the two eval accounts, the 150K accounts in Apex, and turned those into performance accounts. And this morning, we opened up two more eval accounts. So from here forward, we'll be trading with 4 accounts total instead of 2, 2 being the performance accounts and 2 being eval accounts. Now, on these next eval accounts, they're still 150K. I chose end of day trailing now that they have brought that feature up, whereas the performance accounts are intraday. So the plan here for intraday and end of day is to initially trade all 4 accounts intraday style. So really precise scalping, very tight trailing. To where I might be selling continuously before my target profit, profit target, so that I don't get any deep pullbacks, especially in the initial 4,500 where they're both sitting. They're both at 0 right now. I got the performance accounts at 0 and 2 new eval accounts at 0. So I'll treat everything like intraday until I can hit that $4,500 buffer, and then I can start to open it up. Now in the end of day, the difficulty, I think, with end of day on the 150K is that you have to do these in 30 days or less. And if you look at my performance with no red days, it still took the 3 weeks that I traded in March minus 1 day, and then I had a full week in February plus 3 days. So I was really just shy by 2 days passing this account. What a bummer that would be if I'm at just 2 days away from passing 2 eval accounts for the price that you get charged, and then it just resets and you have to start all over again. So that means that I'll need to trade a little bit more aggressively on just the eval accounts. So I start up with 4 accounts, copy trade those, and then once I make a nice initial green, especially in the first 4,500, the idea was to let the PA accounts rest the next day, go to the eval accounts, and then trade those again for a smart trade. Not over trading, just to try to get another smart trade in. I don't even know if I need to consider trading 2 contracts versus 1. Most of these trades were done on just 1 contract. I had scaled in, scaled out a few days, primarily the days that I was down initially in the red. I would start scaling in, which is honestly not a good habit. I should just take the red and move on. But now I'm going to be even more precise. I'll have to have really good entries. And once I get moving on the eval accounts, I've really got to let the runners run. I don't have intraday trailing against me. I have a clock ticking against me. 30 days from today, I have to have $9,000. Will I be able to do it? I don't know. So that's where we're sitting there on the accounts. Let's hope for some good positive reactions there. I did end overall pretty well, 70% trade win percentage with a 2.03 profit factor. And again, I just really wasn't letting my winners run because you feel like you're up against the clock on intraday with the $4,500 initially. And then it's kind of just hard to break out of that. Once you get to their side, you just don't want to see red days if you haven't had any. So it definitely makes it very challenging. And then when you get into performance accounts, you really have to change your mindset from aggressive style trading to protection style trading. You want to really protect your capital so you don't blow up the accounts, because you have to trade them a little bit differently than you do in your evals. And here I am trying to do kind of both simultaneously in the first trade, and then I can let that trade go and go into the more aggressive style eval trading. All right, back to the charts. So here we are. It looks like on the daily here, we're just about to retest this previous resistance going all the way back to last December and last February. I mean, could this potentially be a double bottom? We had our first touch here. What did I say? Last January? December of 24. I'm sorry. December 24, February 25. And then August 25, we tested it once and took off. Might we be testing it again for a second bounce and upward move? If we let go of this structure, I think we're in a different conversation, because at that point, this is I don't know if we're going to be if we do test these bottoms, it's great for the long-term investments, but it also starts to make it feel a little bit scary, just economically speaking, for what's going on in our country. But that's on a different note. We're just looking at today's stuff. We're not going to get there today. Let's focus on the now. So as I start to zoom in here and we see where that white line is with resistance and then support at 23.4, and we're at 23.8 now pre-market. I mean, there's a good chance that we open up today and hell, we're already there. We had a very bearish candle to end the week last Friday, which finally broke that structure at 24,000, which we've just been talking about forever now. It finally let go, and we're not looking like we're going to see a mean reversion back into it at this point in time soon. But soon could also just be in a few hours, or it could be in a few days. So with that, let's drop down to the 1 hour. I tried to clean up my charts and leave the overnights off here for a second so we can just focus on what was already in the past. So you have the weekly value area highs and lows in orange. You have the high and day, low of day from Friday, red and green. And then you have the value areas in white from Friday. So as we can see currently at 6 o'clock in the morning, we are rejecting below Friday's low of day. We are below the value area low. If I look for our close, we are, it looks like net short on the close. I mean, we are bearish over bearish right now. So what would I like to see today? I'm not really even going to put in longs necessarily, just because there is probably going to be a lot of scalping opportunity, but it's going to depend on price action as well as the level that we're at. So the key levels for any scalping of longs are going to be in the areas of low of day, value area low, point of control, and I don't know if we're going to get above value area high today, but there will probably be some reactions based off the open in the first 15 minutes to the first hour of the day that would allow for some short scalping pullback longs. But I'd be really tight, taking 10, 15 points at most, and then just letting them go. Especially on a day like today for me, where I'm starting at zero with performance accounts and eval accounts. I really don't want to start the day off red. So I'll probably be just more patient waiting for short setups. With that, let's jump down to the 15 and take a look at where we're at. So obviously, we're going to continue to just be under the EMAs. We're under the VWAP. I'm going to guess that this little bounce here is because of 23.8, just a psychological number. And excuse me, I feel like I'm going to sneeze. And there's really nothing to the left, so I'm going to guess that was just a bounce off the 800 level. So when we open up today, I will probably look for the opening range break on the 15 and maybe even just a retest of it. I initially, when I first start out on accounts, I don't normally take breakouts. I just find that breakouts are difficult for me because I tend to look all the way back at where your stop loss needs to be. Like let's take this as a breakout. So that's low a day. We take the breakout at 963. I'm looking at, actual resistance from that point, as this hasn't happened yet. Actual resistance is all the way up here. Obviously, I can't take that. So I can get real arbitrary and say, I'll just go 15, 30 points up. But the likelihood you're going to get tagged is strong. You can take the top of this wick, but that really isn't anything either. Whereas if you can get a breakout retest, so we broke down through here and we're retesting. You can even say between 952 and 971, you want to see a failure there. You have this doji candle staying above or below the VWAP, projection of low of day. That's pretty solid. So you take the breakout underneath at 916 and you can say, okay, you don't want 40 points, but you can initially start, God, even that's really tough. Let's take a look at that. Let's see if I can find a good place where I'd put my stop here. Let's jump down to the 5. Pretend I won to take this trade that has already happened. So if I'm looking for a rejection, I'm probably evaluating 947 first. So I see this break here. It fully rejects it. This could be a turnaround candle. You got the EMAs on your side. It did consolidate a little bit, but once that failed, this is my failure point. This is where the bulls had a moment and they didn't get it. So if it fails here, I sometimes will run about 75% through the way of a candle, including even, and preferably the body, but in this case, probably the wick. So say you go, I'm looking at 940, 943 would be my stop. So I really want to try to be about 20 points in from that point. So what is that, 23? We're looking for 23, 23, 23. All right, so I'd be taking it before the end of that wick, but I can risk 20 points, and then what would I be looking for as a low? Well, initially probably a 50, right? That could be a good target, and then if it can just power through 50, I would then probably start targeting wherever I can find double bottoms. So even, you know, here we are at 27. I'd bring that up to about 29 or 30, and then if it powers through that, I'd look at 794. So from this point here, I mean, there's a 100-point trade in here for a 20-point risk. Now, I can guarantee I wouldn't hold on that long. I don't like any of this consolidation here. If I got this and it started falling, it goes up, and then you get this wick and this wick, I'd already be out. You know, I'd say, okay, I'd say if you can get through 79, let's take it down. So that's what, 20 points plus another 20. That's 40 points. It's a 1-to-2 risk reward ratio, which is not bad. And you had a lot of confirmations to say that that trade would work out. A rejection off low of day, rejection off these previous lows here, a VWAP rejection. You have a bear flag setting up. So there's a lot of ability to say, okay, that trade's really going to work, and that would be a good trade for the day. I don't think that's a one and done trade for me. So now with an example trade, what am I looking for today? I think just that same thing. I'm just going to let the market open where it opens. At this point in time, 101 is the close of Friday. I could absolutely see it trying to recapture that. What I would be interested in seeing is recapture the close of day, come back below the open, wherever the opening print is, reject the opening print, and continue on down. And from there, I would just start targeting 50s and zeros, as there's really nothing until we get to minimally about 568 to 468. And working my way down, I'd be happy to take 15s, 20s, and 30s and 40-point moves. I think they're going to be there today unless we just consolidate. There is no news today. But we do have, tomorrow, we have PMI. Now, PMI is currently at around 51. It's only supposed to tick up some, so I don't know how much influence it's going to have on the market today. May not have any, but with Iran going on and Trump can possibly tweet, you never know what's going to happen. So volatility can be really healthy today, or it can be really weak. I don't really know yet. So beyond that, I don't really have much. Shorts, I'm going to look for a rejection of the close, a rejection of opening print, or on the 15-minute opening range breakout, I'll look for a break to the downside and a retest of the bottom of that 15-minute, and then I'm just essentially going to start trailing down as far as I can, and again, very conservatively. Right now, you know, I don't have to make a set amount in my performance accounts, but realistically, to pass 9,000 in 30 days or less, or 20 trading days, I really need to make somewhere probably around 500 a day just to be conservative around any red days. And that's a lot. That's definitely, I was doing that last month, but not that often because I was usually targeting only about 300 a day. So now I need to bump that move up and possibly, you know, look at taking multiple trades in one day. So we'll see where it goes. Good luck, and let's have a good day.